at the S&P 500 E-mini futures 2000 tick chart using price action rules and market geometry to determine where to enter for high probability setups. So we started off this morning with this nice uptrend working higher. You can see we failed to push to the top of this trend line, and then we ended up breaking outside of this channel. Now when you see a break outside of this channel, price action rules tell us that it's going to want to test new extreme. So as you can see, this is the highest high inside of this channel. This is the highest the price had gone while this channel was still in play. And then we broke outside of this channel. Now, where we're looking for high probability setups is to catch this swing to test new high like it did here. So it wants to make a higher high than the one that was still in play inside the channel. And we use the EMA, the 21 bar exponential moving average, as a supportive indicator. We can see how well the EMA rejects prices. You can use it as a key entry point. Key entry points are the trend lines, support and resistance, and the exponential moving average. So you're looking for a setup to go long to test new high. You can see nothing formed, unfortunately. We're looking for second entry longs, which is, well, let's look here. Nothing's really, I guess right here. So you can see you reset the count from this high right here. Okay, you pull down, and the moment you get a break above a bar, like it did right here, you can see this bar broke above this bar. That's a first entry long. And then you go back after you get a break below a bar. So you can see this bar broke below this bar. So we have first entry long, pull back, and if there was a bull bar that formed here, a small nice bull bar, and it triggered above, that would be a second entry long. Now, setups like this have to form at your key entry point. The exponential moving average, the trend line, whatever it may be. And as you do this for long enough, you'll start to determine whether or not a trade is worth taking, if it follows your rules or not. You watch enough like price action, you'll understand like what you're kind of looking for and how to determine if it's a high probability setup or not. After new high is created, we can't look for second entry longs anymore, because that means that the bull pressure played out and we're waiting for a new market structure. So we had this little second entry long form right here. But as you can see, before it formed, we broke below EMA, and then it never triggered above this bar. So it never triggered a second entry long. And we just had new high, so you have to skip this trade. Now there is a first entry long, pullback, second entry long failure as soon as there was a trigger below this bar. You can consider something like that. I skipped it personally, just because for most of the day we've had a little bit of a bullish pressure. I don't like to just go long or short immediately after. So sitting on my hands, I was expecting a second entry short here because we have this little smaller short-term downtrend with break, and it needs to push to new extreme. So if this bar closes bearish, I could consider. It's a little bit risky just because you can see we're kind of creating a little wedge pattern here. But if it forms, I could consider. Let's see what happens. All right, nothing formed. We're back above EMA, so this is a no trade zone for me. I'm just sitting on my hands and waiting for a new market structure. Let's see what the market wants to do. All right, we had a little lower high form. You can see we have first entry short, pullback, second entry short. As soon as it triggered below this bull bar, we can't go short below a bull bar though. Then we had a little lower high form, but it's a doji. Now sometimes you can consider a double bar entry. So the bar immediately after the bar you were looking to enter on, if that forms well, you can consider. But as you can see, we're super stacked. Looks like we're finding some support right here. And I don't want to go short directly into that. Even though we need a new low, it's important to skip trades like this. You have to be patient, follow your rules. You can't just jump into any trade that you see. It's better to just wait for a super high probability setup than risk your capital on something like this. Not a lot going on in the market this morning. We do have a bit of a bull bias. You can see we continue to work higher. We created new low, pushed back above EMA. We had this small trading range here, and we know that most breakouts fail. And it broke out of this trading range, pulled back, tested that resistance as support, and now we're back up. So definitely some bull pressure. I drew this wider channel watching this. We have to account for this bull pressure somehow. There's a lot of empty room at the bottom of these trading ranges, and we just keep working higher slowly but surely. So watching this wider channel now, let's see if we can get a second entry long here at the EMA. All right, guys, coming back. I just entered this trade right here. I entered at the close of this doji, risking 8 ticks. I put my stop loss 1 tick below that signal bar. You can see we have 2 broad legs pull back to EMA, and it was above EMA. Looks like it was rejecting to the upside. But after this bear bar closed right here, you can see it just looks so bearish. You know, you have to be comfortable with second guessing your trade after you enter it. You can't get locked into one bias, because price action still forms after you enter the trade. And if it shows that it might go in the other direction, you have to be comfortable with taking break even. Even if this trade works, you know, it's better to take that risk off the table, get out break even, and then continue to wait for the next trade than stay in because you're greedy or you have FOMO or whatever it may be, you know. So into that trade, took break even, gonna continue to wait for the next one. If it works, we might look for a higher low here. Actually looking at it, we have new high, first entry long, we'll pull back, second entry long, failure, failure. Okay, so this is actually, it's a visual second entry long with the 2 broad legs, but it's a double trap technically, because we have the break below this bar right here. You can see new high, first entry long, break below. So that's first entry long, pull back, second entry long when it broke above this bar, pull back, break again. So this is a double trap. You can consider if you're a bit more risky. But like I said, after that bear bar closed below EMA, I was like, I'm getting out of this. We'll see what happens here. All right, guys, we just had this little mini second entry long right here. You can see new high, first entry long, pull back, second entry long. But your original bar was this bear bar, and we can't go long above that. So you need to wait for this bull bar to form, wait for a trigger above that, enter the trade, and then put your stop loss 1 tick below. Now it ended up working out in hindsight, but at the time it was forming, you know, we have this break back into this trading range right here, and you never know if it's going to continue to work lower. You can also draw an even smaller trading range, something like this. I don't know why I got 3 of those things, but you can see it is confirming a failed breakout, pull back in. But you're going long right into these highs. It's super congested. So in my book, I think you got to sit on your hands here and wait for another high probability setup. All right, guys. So we had new high of this uptrend form. We had this second entry long form here. We'll zoom in on this one. So we have new high, first entry long once it broke above this bar right here. Pull back once it broke below this. Second entry long after it broke above this bull bar right here. Now, you can't take these trades. Look, we're in the middle of nowhere. There's no key entry point to take it off of. It's just no man's land. You can't pick bottoms or tops. You gotta wait, right? So I was hoping for a higher low confirming the second entry long above EMA. You want it to form really close, so you want it to break above EMA and then pull back right after and form a nice signal bar confirming this second entry long or whatever setup it may be. But once we push this far up, I was hoping for a second entry long at EMA to test new high. Nothing formed, unfortunately, but it's good to see that price action played out just as we expected it to. After the break of the channel, we expect this uptrend to create new extreme, which is new high, higher than the highest high in the channel. It did that. Now, after new high forms, we expect correction or reversal. So it's going to be a new market structure. If we continue to push higher, we can look for a potential wider uptrend, but it's a little too early right now, especially with how confirmed this channel was. You can see nice bounces right here off of these key entry points. So let's see if it wants to reverse or if it wants to correct here. I'm going to go ahead and call it here, guys. It's only 1 o'clock. I normally quit trading at 1:30, but after a new extreme is created for a big uptrend or downtrend like this, it normally takes quite a while for the market to figure out what it wants to do next, either correct or find a new direction. So there's only 30 minutes left of trading, and it's going to take a while for this to do anything. So overall, these are my least favorite things to trade right here, like the slow, choppy uptrend or downtrend. You can see there's a lot of areas of development that are just going sideways. In hindsight, the only trade that I really like is this one. It's kind of like a second entry long confirming breakout pullback. But I mean, there's this failed breakout of this smaller trading range and then a higher low confirming that. It's a second entry long off of the EMA, and it's a higher low confirming the double trap that I took right here. With this trade, I liked it when this bar formed and it got the trigger. That's why I entered it. But then it got this bear bar right here. And we know that most breakouts fail. And you can see we have this trading range. It broke out of the top of it, and it looked like it was going to pull back in. So as soon as I saw that, I took break even. You have to be honest with yourself. Like after you enter a trade, you have to continue to watch price action and be honest and disciplined enough to realize, like, okay, maybe I was wrong. You know, it's better to just take a small scratch, small loss, than hold that FOMO, hold that greed, and hold that trade until it stops you out for the full 8 ticks or whatever you're risking, you know? So overall, these are my least favorite things to trade. These slow chop uptrends or downtrends. Price action still works like you would expect it to, but there's so much area of development, a lot of sideways action. Last week was really, really good, but this week has been super slow. Not a lot of volume, not a lot of setups. I mean, all day this is all we formed, you know, just like a slow chop uptrend. So hoping for better trading days this week. I appreciate you guys for coming and watching this video. Good luck with your trading.